Hello, Jim here. Today I want to talk about what I believe is the most important part of trading options, and that's setting goals. Today I'm going to share with you my goals for this year, what I plan to make on a monthly basis, as well as what kind of return I'm trying to get. I'll also share with you what my returns were from last year, and then I'll go into a bit of detail on some of the things that went well and some of the things that went wrong. So I suggest that you stay until the very end because it's going to be well worth your while. Okay, now let's just start from the beginning. I've been trading options now for many, many years. I've started just selling covered calls and learning the right way to do that. Then about 4 years ago, I got into selling puts and more complex strategies, and I started slow. I set goals that were fairly achievable, but then over the years, I've increased them. At first, my goal was literally making $1,000 a month, and could I do that with my current portfolio? I was able to reach that, and then quarterly, I changed it. And then once I really got into trading, I updated that probably on a yearly basis. So this is typically around the time that I like to set the goals for the upcoming year. Now, what is the power of goal setting? For me, that it gives me kind of a reference on a monthly, weekly, daily basis. You know, if I know how much I want to make on a monthly basis, I can identify, for the week, if I've done well enough, do I need to continue trading? It'll give me the emphasis or the, know-how to stop trading at times. I believe a lot of people trade too much. They just keep trading. It's almost addictive in a way. So by setting some goals, once you reach what your goal is for that week or that day or that month, you don't necessarily have to have it as a priority. I encourage people, especially if you're retired and you're trying to do this for your retirement, once you reach those goals, go on and do other things. Don't try to keep making more and more and more. I believe it takes you away from probably the finer things in life. Get out, play tennis, play golf, walk, take the dog for a walk, meet up with friends, get out there and live life, get away from the screen. I do believe too much trading can be detrimental. I have heard some stories recently that Gambling Anonymous is the most recent people going to Gambling Anonymous are people who are day traders or who even trade options. So by setting goals, you can kind of determine where you stand. And then if you've reached your goal for that week or for that month, you can potentially not do as much trading and go on and do other things. I set objectives for options premium. I also set objectives for interest and dividends. It's a little bit harder to set objectives for dividends and interest, but I do like to at least set something basic, mainly because it's kind of hard to really increase how much you can make with dividends and interest. Now for premium, that's a different matter. I have a lot of time that I put into determining, should I be trading ETFs versus stocks? Should I do more contracts, less contracts? Should I, go for a longer expiration, a shorter expiration? Should I take a higher delta, lower delta? I put a lot of effort into determining what works. And I also like to listen to other people who know more than I do. I realize at times I don't know as much as some other people. I really like to watch Tasty Live and SMB Capital and see what they suggest. And then a lot of my members, some of my members are probably more advanced traders than I am. And I define myself less as a hardcore trader, more of an investor. And then I do trading for extra icing on the cake. It's not my main emphasis. And it kind of changes over the last couple of years. Just like my goals change or I increase my goals, I also kind of change my objectives based on what I learned. I like to tell people it's a journey. I have new members that start and they see what I'm making or they see what another member's making and they want to make that same amount like day one. And, I have to emphasize it's definitely a journey. As you learn more, as you become a better trader, as you learn how to evaluate companies and ETFs, you'll do better. You'll pick better companies. You'll find better opportunities, especially when a company or a stock is declined to a point where you believe it's really good buy, meaning it's not just a great company, but it's also a great company at a great price. So just wanted to mention that. One of the things I did learn, I did do a little bit of speculation this past year, and that's something I'm going to really not do this year. I'm going to really avoid it. I tried to make a few bets related to earnings that didn't go well. I also got fearful at one time thinking Tesla was going to bomb, so I bought some puts for protection. I will continue to buy puts for protection, but I'm not going to do it speculatively. I think I did buy a put on Palantir thinking it would go down, and that was definitely speculation. So in that case, buying the put really wasn't the right idea. I thought Palantir was going to go the other direction, and then that put would become worth quite a bit. So that, in that case, that was also speculation. So I'm going to speculate a lot less. And then I'm going to, like I've said in every video, and I'm going to say it here again, I'm going to focus on quality assets, meaning good companies at good prices. So I like to look at return on equity. I like to look at return on assets, return on capital. I also like to look at debt to equity. I like to look at what does cash flow look like? Is the company growing? Does it pay dividends? If it pays dividends, does it have a very low payout ratio? You know, all those specific factors help me make those decisions that it's a quality asset. Now, I get a lot of questions about companies. I will not invest in companies that don't make money. And so a lot of people ask me about specific companies that aren't making money. I will add them to my watch list and keep an eye on. And eventually when they are making money, then I'll invest in them. And I don't typically invest in Bitcoin or very risky assets. Now, I am trading in Mara, which is a Bitcoin miner. So that is one exception. And that's primarily to learn a little bit more about Bitcoin and, learn a little bit more about that company and how Bitcoin works. But I'm very risk averse. I'm nearly 59 and a half, so I can start accessing my retirement accounts. So I don't want to take big chances. I don't want to blow up my accounts. And I've been fairly successful. In the next part of this video, I'll go into detail on how I did last year, how I've done the last few years, and I'll talk about what my goals are for this coming up year. So let's go ahead and jump into the next part of the video. Okay, now I've opened up my December planning worksheet. I'm not going to go over the specific trades. I usually do around between 30 and 40 trades a month. Probably for the year, I do pretty close to 400 trades. What I'm going to take you to here versus going over the trades, I will put out another video probably next week where I'll go over exactly how I did in December and the specific trades and what overall December looked like. But my point here is to come over to goals, and you can see I have options, favorites, trade rankings, checklists, guidelines, goals. And here I've actually set my goals for the month. But before I go over those, let's look at how last year went. And this is kind of a summary. So you can see at the beginning of the year in January and February of last year in 24, I averaged right around 6,700, 7,000, in that range. I had no assignments. In April, I did have my first assignment. I had probably my best month ever. I did 7,557 in premium that I brought in. I did have Zoom get assigned, and Zoom has worked out well. It's actually a lot higher than it was assigned at the time. Then in May, I kind of had a little bit of a rougher month. I think we had a bit of a dip, and I had 400 shares of Path assigned to me, which again is another AI company. It had some bad earnings. It let go of its CEO, and it dropped big time. I still own them. I still have a pretty good loss with them. I do think they're going to turn around, and it might happen as soon as the next earnings. But I also had 200 shares of CVS, which was a dog. Because of the stuff going on with healthcare as well as stealing, CVS took a big dive. I also had another 100 shares of Zoom assigned to me. And I had been trading Zoom many, many years and doing really well with it. So I'm fine with owning 200 shares of Zoom. Then I had 200 shares of Shopify, and it went higher. I've had issues with keeping calls above its current price. So it's worked out well. But then I also had 200 shares of Walgreens assigned, which also was probably one of my worst trades. Not so much that the trade was bad, but Walgreens just went down and down and down. I mean, they may be facing bankruptcy now. I did sell them at the end of last year. It took them as a loss against other gains, so I harvested those losses. Luckily, they were in my taxable because I could not have done that with my retirement accounts. And because of that, what I typically do is I try to calculate the loss related to all these assignments back in May, but I still made 4908, and that again is after associated losses with past CVS, Walgreens, and I believe at the time Zoom and Shop were also down, but they've bounced quite a bit recently. June was a good month, 78.97. I did have 100 shares of Polaris assigned. At that time, there was no impact. Now Polaris has dropped quite a bit. I do think they're going to bounce back. They own Indian Motorcycle. They're just high end. I think gas prices being lower, so I'm holding on to them. But right now, they are a pretty big loss. July, no assignments. Best month ever with premium, 9,175. August, another good month, but I did have some assignments. I had 200 shares of Airbnb and then 200 shares of UPS, which UPS kind of, it goes above and below my cost basis, but it's done pretty well. I've been able to sell some good covered calls. Same thing with Airbnb. I think I might have like a 15% return currently on Airbnb. Then September, 74.23, no assignments. And then October, another good month. My highest up until that point, no assignments. November, I took my first pretty big loss, which was ACLS. And again, it was 68.54, but I believe it was around a $9,000 month. I took around a $1,500 loss for ACLS. So they were assigned to me, but then I ended up letting them get assigned to someone else with a long put. I didn't have as much faith in their chip maker related to the EV market. And with gas prices coming down, I just don't see the EV market being a good place to be. So I let those go. I still have positions in AMD, MU, who else? Qualcomm, NVIDIA, but ACLS, I just decided I don't think long-term it was a viable company for me to own. Then in December, even though I had my best month yet, I did have some losses with Polaris, and then Johnson & Johnson, I think, is broken even right now. I did sell some covered calls recently, which brought it to not really a loss, but kind of a break even. But overall, you can see the amount of cash, 91,400 for the whole year, and majority of this, all but probably 20,000 of it, is in my retirement account, and it pretty much coincides. I started the year with around 440, 445 in my retirement account. I'm right now right around 530, which is like a 15-16% return. But the beauty of selling options is the amount of cash that you have coming in on a monthly basis. So some of this is related to my taxable accounts, which I've been pulling money out, putting into this barndo built. I'm building what's called a barndominium. I call it a barndo, and I'm trying to cash flow as much of that as possible. So we bought the land, we've graded the property, we're ready to get the cement. We hired a new builder. We had some issues with the previous builder. But a lot of my cash is being put towards that. I'm, like I said, trying to cash flow quite a bit of it. But this is like 76.16, which, my goal was, I think, 7,500. I originally, back in 24, I think I did an $8,000 goal, but then realized that's too high. Then I believe I rolled it back to 7,000. We can see here, 7,000. So this year, what I'm going to do is look at doing 8,000 of premium income each month, an increase of around 14.2 0.29% or just shy of 15%. So my goal will be to average. So next year, when I come to this point, this would be right around 8,000. Not a huge, not a huge increase, but I like slow and steady consistency, not trying to make a killing, just trying to make enough to, earn a higher return, have that extra frosting on the cake. Now I'm also goal of increasing dividends and interest. I'm currently making around 3,300 here. You can see my goal last year was to go from 3,000 to 3,300. So that's interest and dividends. And my goal this year would be closer to try to get to 3,500 between interest and dividends. And since the interest rates are going down, probably means more dividends. And then the goal of growing my portfolio 15% a year through options, premium, and appreciation. Hopefully I can do a little bit better. I'd rather that be closer to 18%, but I'm going to set the goal of 15%. Actually, let me change that to 18%. So because I did 15% this past year, and then 18% a year through options, premium, and appreciation, easier in new accounts, more difficult in an invested account. So most of my accounts are fully invested. I own probably a dozen or more than a dozen, probably 15 ETFs. One of them relates to SPY, a lot of Vanguard, also a lot of Fidelity type funds. So I'm going to continue down that avenue. And then over here, let's just look at the notes. So in 24, it took a while. I moved my retirement accounts, all my retirement accounts I had at Schwab over to Fidelity. And then I moved, or actually before that, I moved my 401k at Fidelity into an IRA. And that's primarily so that I could get the really good interest, where it's with them, it's a true sweep account. With Schwab, you got to move it in and out of SWVXX, especially in your retirement accounts. Schwab does give you a little bit more freedom in your taxable accounts. I still like the functionality and features better at Schwab. So if rates keep going down, if they go down another percent or two, and of course you never know, they may get back down to 2 or 3%. I may even move all my funds back to Schwab, just because I really like the features better there. I spend a lot of time on the phone trying to get higher interest rates with Schwab. A lot of people either on the YouTube videos, they'll add comments that, you can do this in Schwab, but I've spent hours on the phone trying to get it where it's truly where I'm truly earning the higher interest, and I've had no luck with it. Other than, again, in the taxable, you can get credit, but sometimes, again, you have to move funds in and out of the money market. Let's move this up here. I am a spread a bit thin with so many accounts. Now that's changed. I have fewer accounts. I have 4 primary accounts at the time. Before I moved everything, I had more like 8 or 9. The interesting thing is my IRA and my SEP and the new IRA from my 401k, I could combine all those 3 together. Now I still have the SEP at Schwab. I'll probably fund it this year, mainly because I like the ability to fund it even with my tax extension. So in a way I can look at what I might owe, and then I can fund my SEP and lower my taxes potentially. So I'm probably going to do that again this year. Thought that doing fewer trades with more contracts on great companies might be better. And that is true. I have been trying to measure which trades are best, and sometimes I'll do more contracts in those particular stocks or ETFs. I've also found that ETFs, I've hardly had any assignments in ETFs. They're definitely safer. There is an argument to potentially just do ETFs when you're trading options. You might make a little bit less, but the fact is you might not have as many assignments, or the stock go against you, like I talked about with CVS and Walgreens, and there's a few others that aren't in that list. It's more difficult to trade during the holiday, so it always seems to be a little bit harder in November and December. And then a few stocks have had big impacts. So this is what I was talking about before. So between Polaris, Walgreens, CVS, Path, Devon, and there's a few others, Surge, you know, I can't think of, Johnson and Johnson was down a little bit, but I believe there's a few other companies that are added to this. So it's total like 20,000 drop. So again, there may be an argument to stay away from stocks or owning the stocks. I do know some members, that's the avenue that they've done. They don't typically try to own the stocks. I still like to own the companies because long term, I still think you could potentially do better, especially if you pick up the right companies. And that may be the issue. I'm learning along the way. Some of these companies like Walgreens, I think they were assigned to me back in 22 or 23, and CVS may be the same situation. Some of these, well, no, CVS was in May of this year. Same thing with Path, but there were a few others the previous year that also were dogged, like Big Lots, Lumen. And then it reduced my return from around 22%, something like that, to 15. And then covered calls have also been an issue at times. Sometimes and I tell people sell covered calls above your cost basis, but with some companies, they may shoot up. And especially if they don't, if they're a company that doesn't have a ton of volume, option volume, or implied volatility, or a lot of contracts or expirations, it may be hard to roll those if you end up deep in the money with covered calls. So I'm reviewing my whole covered call process, trying to find a better way. I've mentioned in previous videos that I'm looking at doing a call spread versus a covered call. I'm calling it my covered call spread. And there may be a couple of other avenues. I'm also waiting a little bit longer and picking, now I'm not just selling a covered call above the cost basis, but I'm also wanting like a 20% return in that time frame that I'm putting the covered call on. So, something I'm looking at. Let me know what you guys think. How are you handling these deep in the money covered calls, which, can be really tough on your returns long term. Just like I said, those 10 or so companies that didn't do well caused about a 20,000 drop. I wouldn't be surprised at covered calls. I also lost like another 3,000 or 4,000, or maybe 5,000 or something like that. So, and that's what I look at. You can see I have previous years how I did. And I've steadily increased it. So 24 was much higher than 23. 25 looks like it's going to be higher than 24. This is just related to Social Security. Some of the other discussions I've had, or even in the family, my sister's 62 and she decided to go ahead and take Social Security at 62. And I'm still debating that, right? I recently said I'm going to wait till 67. And with me, it's more, I don't want to be limited with how much money I can make. So if I took it in 2 years at 2.5 years at 62, and they tell me, well, you can only make $45,000 a year, I don't really want that. But I also don't want to wait till 70 or 72. So right now I'm thinking 67. The only exception for me would be if my health, if I had health issues. At that point, I would definitely take it at 62. Being a long-term cancer survivor, you never know, having been through cancer before and chemo and surgeries and that kind of stuff, it's always there. I always know I could come back at some point. So that's what I wanted to share with you guys. Again, if you're a member, I will make this available probably within the next day or two. Are you doing goals like this? Let me know what you guys think. Are you setting goals? Or are you just trading? Are you just jumping in and just trading? I'm hoping most people are setting goals. If you're not, it can make a world of difference if you do. So leave a comment. Let me know what you're doing, or if you completely disagree with the way I'm doing this. So as always, thanks for taking the time to watch, and I look forward to seeing you next time.